Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN AM for Thursday, June 4th, 2020. Here are our top stories. We'll assess the impact of the pandemic on cryptocurrencies, and then the number of Bitcoins on exchanges reaches an all-time low. Joining me now to discuss this and a lot more is Kevin Kelly. He's the co-founder of Delphi Digital. Kevin, thanks so much for joining us on the program this morning.
Thanks for having me back.
Yeah, before we kind of jump into the state of affairs around digital currency, how are things going for you and the Delphi Digital team right now?
Things are going well. We've obviously been sheltering in place and social distancing for quite a while now, but I think we're all starting to get a bit used to it. Maybe a little bit jaded to what's going on here. We're in New York, so it's certainly been a bit hectic. But no, I mean, all things considered, we're doing well.
Yeah, well, that's great to hear. I'm so glad. I'm sure you're doing your fair share of Zoom and Skype meetings and whatnot. So and conference calls, as we all are. So let's just jump right in. Let's talk about the economy. Let's talk the macro and how that relates to digital currency and digital assets in general.
Yeah, it's a question we get quite a lot, especially as you've seen the kind of macro space really started to heat up in the amid, what's going on with COVID and the coronavirus outbreak. I would say where we are now is certainly a bit different than where we were even, 2 or 3 months ago. You kind of had this initial really kind of big sell-off phase in risk assets, as we've talked about on your podcast before. And what we've seen now is a pretty sizable rebound in risk, and you're starting to see risk appetite start to come back. And that's actually helped boost, Bitcoin and other crypto assets, because again, they still sit a bit further out the risk curve in terms of this being a nascent technology, an emerging asset class, one could say. So it's certainly given a bit of a boost to digital assets. Where I think we're coming to is a head or an inflection point is I think policymakers are certainly faced with kind of this inflection point, right? They can either continue to go by the playbook that they've been running since we really saw, COVID-19, since we saw that outbreak really start to ramp up, especially here in the US. And what that means is basically policymakers, both on the monetary and fiscal side of things, right? So if you're thinking about the US, the Fed and the Treasury are now kind of getting to the final phases, I guess you could say, of their first phase of stimulus and trying to basically keep the economy, the engines running, right? Mm-hmm. And so what I think the inflection point is policymakers can either continue with that current playbook, which means you're probably going to see, another $1 trillion at least in terms of funding, especially for small businesses that continue to struggle, things of that nature. And that'll be monetized by the Fed in this continuation. You either go that route, which certainly has implications for Bitcoin, digital assets and markets in general, or the more fiscally conservative route would be to, maybe wait a little bit longer, see how things play out. But from my perspective, at least, I think that certainly risks a much larger kind of economic downturn, in which case policymakers would have to come back in and provide even more stimulus because the outlook would have gotten even more dire. So I think right now we're in a really interesting position. The long-term implications of a lot of this are certainly, as we've been talking about for a while, this idea of currency debasement, right? And when we talk about fiat currencies like the dollar, the euro, but a lot of emerging market currencies as well, this idea of currency debasement, I think, is certainly going to be more in the forefront of investors' minds, because when you're thinking of, most people don't think about, the effect that currency fluctuations could have on their portfolios, right? And the U.S. dollar, we're lucky enough to sit, in a country where we obviously have the world's reserve currency, and the dollar has been relatively strong compared to, a number of other foreign currencies. But when you think about the potential implications of dollar-based assets, whether it's stocks, bonds, et cetera, in a world of kind of asset price deflation and currency debasement, it certainly helps bolster kind of the narrative for digital scarcity and assets like Bitcoin, for example.
So let's talk about one of the big concerns about printing money, which is essentially what the Federal Reserve is doing here to stimulate, is that eventually you get inflation, because you have a lot of money chasing goods, and that tends to drive up the cost of things. What does this do? Just break it down. Let's talk about digital currency. What does this do with respect to digital currency? Because my understanding, and I want your clarification here, my understanding is there is a fixed amount of Bitcoin, fixed amount of Ethereum, fixed amount of Ripple, digital currencies that is produced. So does it get the same inflation? Are there the same inflation concerns around these types of assets?
Yeah, so breaking down what the Fed and again the Treasury are really doing right now. And it's a really important question because right now, one of the biggest kind of debates in the macro space is whether we see initially these deflationary pressures, which I think everyone at this point expects, which means you're going to see kind of prices fall because you've seen a drop in demand, you've seen oil prices collapse, you're seeing global trade start to contract. A lot of those things can be deflationary, at least in the short term.
Mm-hmm.
Inflation is a really interesting and debatable topic because it's much more of a psychological event than it is a monetary one. And what I mean by that is just because, let's say money supply or the Fed is printing, trillions of dollars to actually buy these treasuries that are coming to market in order to kind of, again, monetize the government spending. Just because that money supply increases doesn't necessarily guarantee that you're going to see a pickup in inflation. It's more about what people's expectations are going forward. And then you can start to see inflation trickle in. What's difficult right now is that it's not like this fiscal stimulus is coming and giving a boost to an economy that maybe is coming out of a recession and can really start to ramp up and spark, greater credit growth, economic growth, things of that nature. What is basically trying to do now with fiscal policy is essentially plug this gaping hole that we've seen in not only the U.S. economy, but the global economy, and go after those revenues that the economy would be generating anyway, right? So it's not like it's being put into productive investment or things of that nature, which I think can certainly suppress some of the inflationary pressures you might see from further money printing. Now, what that means longer term for some of these, digital currencies and crypto assets is important to clarify. I mean, Bitcoin itself, yes, you're spot on, has a fixed supply and a fixed inflation schedule, as they like to say, an issuance rate schedule.
Mm-hmm.
Ethereum is still, it's not like it has a uncontrolled monetary policy, but that is still being debated in terms of what the longer term kind of predictable inflation schedule is, right? So it's not quite as digitally scarce, I guess you'd say, as something like Bitcoin. But the longer term implications for both of those is when you see kind of these debt to GDP levels rise, especially in advanced economies, past a certain point, the argument is around 90%, which in the US, we're now approaching 120%. The incremental increase in that debt becomes less and less productive, and it actually can hamper economic growth. So what we're seeing here is there's only a handful of ways in which advanced economies can get out of these big kind of debt burdens, and one of the most, we think, obvious ones, or one of the most likely, is going to be the government trying to spur greater inflation, greater currency debasement, because that makes the kind of real value of your debts come down over time. And what that does is, again, gives a boost and a big kind of tailwind to this idea of digital scarcity, and creating an asset that actually is provably scarce versus the world of kind of fiat abundance that we've really moved into.
Yeah, I kind of feel like we're kind of going back in the 70s when I was born. We went off the gold standard, and we saw obviously things kind of take off for the US. We were in some difficult times in the late 70s. But I almost feel like we're kind of with digital currency, because of the fixed amount. I almost feel like it's kind of going back, and not backwards in a negative way, but backwards in the sense that there is this fixed currency, and actually we kind of go back on a standard, which I would argue probably might be a good thing longer term.
Yeah, it's a really interesting conversation to have because nobody really wants, if you're sitting in government, you don't really want the world to move back towards a gold standard, because again, that'll hinder your ability to be able to have independent monetary policy, and it'll be essentially a check on responsible government policy, right? Which
Mm-hmm.
I'm not to say that what's happening right now is irresponsible, but I think longer term we're going
Sure.
to see that there's excessive money pumped into the system. But when you talk about things like a gold standard or Bitcoin standard, the beauty of Bitcoin and why we think there is still such a kind of asymmetric opportunity here is starting points matter, right? So it's a very small asset compared to even the investable gold market, for example. It's about I would say 10 to 15x is the gold market compared to Bitcoin. And what's interesting is that you don't necessarily even need Bitcoin to win the war necessarily to be an incredible, successful investment, right? Even the fact that it's being part of the conversation in the mix of gold, silver, precious metals, crypto assets more broadly, this idea of trying to, again, maintain that purchasing power and find assets that are non-sovereign and sit outside, the financial system, and they aren't tethered to, fiat currencies, is one I think that is the demand for that type of asset is going to continue to increase. And again, Bitcoin doesn't necessarily have to become this global, reserve currency immediately, at least, for, Bitcoin to actually turn out to be a successful investment, in a multi-asset portfolio, for example.
Yeah. Well, Kevin, I want to go to a quick break, and we come back. We're going to talk to Kevin about Bitcoin in particular and the volume over the last several months. So stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as 1 day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. We're talking to Kevin Kelly. He's the co-founder of Delphi Digital. Kevin, thanks so much for sticking around this morning.
Absolutely. Thanks for having me back.
Yeah, there's so much to talk about here. We always love having you on. And with all of our guests, we want to make sure that they get, the full episode to talk about these really important issues. So let's jump in and talk about Bitcoin, and let's talk about how Bitcoin is potentially being pulled off of some of these cryptocurrency exchanges. Does that make sense? So why don't you jump right in?
Yep. Yeah, so great point. We've been seeing recently the amount of Bitcoin, as you just mentioned, being pulled from exchanges or taken off exchanges increase, right? So that rate is increased. And what that basically means, and you kind of need to take a step back and say, okay, how do people actually maintain custody of some of these assets? Bitcoin, again, at least right now, a lot of people are self-custodying those assets, right? So they're basically taking them, you can take them off an exchange, you can put them into what you call a cold wallet or cold storage. And basically what it does is it keeps your Bitcoin safe, right? Those devices never touch the internet. It's a way in which you can try and increase the security around your digital assets. And so the implications of seeing Bitcoin come off exchanges, for example, some people have taken that as an indicator that people are in this for the long haul, right? And a lot of the weak hands have been shaken taken out in the last, let's call it 12 to 18 months, because we've seen a lot of volatility, a lot of, sell-offs and rebounds. And we've gone over that a number of times. And so what we're seeing now is the implications of Bitcoin potentially actually being used as a store of value or a safe haven, or, to be quite frank, a kind of apolitical speculative asset that people are betting on. Because again, as we've talked about even in the previous segment, Bitcoin's asymmetric return profile and potential, people are looking at now and saying, okay, the world that's emerging around us, the narrative around Bitcoin has certainly strengthened, right? So long story short, the implications of, some of that crypto being taken off and Bitcoin being taken off exchanges is people saying, okay, we're going to put this into cold storage. We're in this for the long haul. We're not going to be trading this or selling this, anytime soon, at least we expect. And so again, that can be a potentially bullish indicator for people who are trying to understand how people are viewing this asset from a kind of store value perspective.
So it's not trading, it's being pulled off exchanges, which means that people can't buy and sell on a daily basis or intraday basis. And so that it almost impacts the volume in a way, right? I mean,
it certainly
the
can.
volume is, and does that drive the price of a Bitcoin up as a result because of scarcity? I'm just trying to understand.
Yeah, no.
You're gonna have to bring me along on this, because I'm thinking from an economic point of view that creates scarcity, and therefore I would think would drive the price up. But I want to make sure I'm correct.
Yep. No. I mean, a lot of implications you just mentioned are you hit the nail on the head. So when you take the Bitcoin off exchanges, it's not to say that you can't necessarily trade daily or intraday, right? What's great about this industry is there's a number of recent, we'll call them technological advances, for lack of a better term, that allow you to be able to kind of hook up these cold storage or cold wallets to exchanges if you do want to trade, right? A lot of bigger funds can do this as well now. When you talk about self-custody for the individual, right? For me, for example, if I said, all right, I want to take my Bitcoin off exchanges, because we've talked about hacks before, right? And it's important to differentiate between most of the hack, just about every hack you've seen comes from usually an exchange or some type of, Ponzi scheme, or somebody who's acting maliciously, but that's not the same thing as a hack on the Bitcoin network, right? So when you have your Bitcoin on exchanges in these hot wallets, like they like to say, your Bitcoin is potentially vulnerable to some type of theft. And so if you want to take self-custody of that, if I were going to do that personally, I put it into a cold wallet. I can literally store that in a safe in my room, for example, and I know my Bitcoin's safe there. So that's kind of the mentality behind, trying to figure out what it means when these come off exchanges. That also can, to your earlier point, increase the scarcity of the kind of circulating supply that's around for people to trade, right? And so when you have periods in which volume potentially even increases, but you're seeing, this Bitcoin come off exchanges and it's not really in circulation, you could certainly see some larger kind of price moves, because there is, less Bitcoin, I guess you could say, to go around. And that's something else we track, is looking at circulating supply and looking at these kind of holder trends longer term, which is great because, the Bitcoin blockchain, we're able to query it and actually look and build out these really interesting kind of behavioral holder trend models that you wouldn't be able to do in really any other asset class. So long story short, again, that store value narrative is something people are really hammering on, or trying to figure out how people are viewing this. And yes, there are ways in which you could still trade this, but I think the broader signal is that, some people are buying the Bitcoin, taking it off exchanges, putting it away and saying, okay, this is something that, is going into, my larger portfolio for the next, let's call it 3, 5, 10, maybe even 20 years, if Bitcoin really does what we all think, it's capable of doing.
So Kevin, are we closer, and we've talked about this on the program before, but are we closer, for example, to an ETF, an exchange traded fund? And are we closer to, for example, an IRA or a retirement plan? Because it seems to be, just again, from the lay perspective, that now there's some validity, and I don't know if that's even the right word, there's validity to this asset. And if people are willing to hold it in a cold wallet, as you're terming it, and hold it kind of, I'm kind of calling it offline, but maybe that's not the right line.
Yeah.
And hold it in their portfolio, then are we closer to including it in our IRAs, our retirement programs, our pensions, things that are today tax deferred, with the hope 10, 20, 30 years down the line to have this as an asset that we can begin to draw down from?
Yeah, it's a great question. So on the ETF front, I think we're still pretty far away from getting an actual ETF approved. But that's not to say there aren't a number of companies and firms working on building out the infrastructure to be able to support financial advisors, private wealth managers, that entire independent RIAs, that entire industry. One company really quick I'll hit on that we've been working with is a company called Eaglebrook, and they are basically building out and have built a Bitcoin, kind of a pure Bitcoin SMA product that, financial advisors, private wealth managers can actually put their clients into, get access to, manage that in a multi-asset portfolio sense, and actually get paid on being able to advise on Bitcoin, which, historically hasn't been the case, right? And that's why there's been a lot of kind of tension, I think, between, certain financial advisors trying to recommend, Bitcoin in a portfolio sense. So there's a number of companies that, again, are working on this and working on getting the proper exposure and infrastructure built so that, advisors can get exposure to this for their clients in a compliant way, which, as you know, is incredibly important, especially when it comes to things like custody, which they've completely solved and have all figured out. So very bullish on, obviously them, but the infrastructure being built out to support the advisory space. But right now, I think in terms of a pure ETF, I think we're still, a ways away from that, just because, again, the SEC and other regulatory bodies still have, concerns over Bitcoin's volatility and a number of other things.
Yeah, can't forget the regulators. They played a very important role.
Yep,
can't forget them.
absolutely.
And I know they'll probably be issuing, and I know Congress is looking at this as well. So they of course will weigh in order to protect the investor. Kevin, always a pleasure chatting with you. Really, I learn something all the time on the podcast and also on the program when you're on, and I do from all of our guests as well. Stay safe, and we'll talk to you again very soon.
Always love sitting down with you, Jeff. Really appreciate it.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, and more, check out today's edition of The Morning Pulse. We're back again tomorrow. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Attention! The Centers for Medicare and Medicaid Services has officially authorized new benefits that Medicare Advantage plans may include. To get the benefits you deserve, you can call the Medicare Coverage Helpline.
Hi, I'm Joe Namath. If you're on Medicare, this is important information. I called the Medicare Coverage Helpline and they instantly looked up my coverage. In this one simple call, they offered to enroll me in a plan that includes rides to medical appointments, private home aides, doctors and nurses' visits by telephone, and even home-delivered meals. The plan also includes dental, vision, hearing, and prescription drug coverage, all at no additional cost.
Don't delay. Call to see if the new benefits are available in your area.
Call the number on your screen now. It's free.
Call 1-800-757-1451. That's 1-800-757-1451.